at 105.705. Long position open on Japanese yen at 105.705.
Welcome back to the European market open. 8:21 here in London, 9:21 in Paris or Berlin. European equity markets in positive territory then, apart from the FTSE 100, which is really playing yesterday's game because we were closed here, of course, in London for the bank holiday. Let's talk about tech. And Zoom's second quarter revenue jumped more than 4 times from a year earlier. The company stands out as one of the main beneficiaries of the pandemic as consumers flocked to the video meeting service. Zoom sales projections signal the explosive growth may continue. Joining us now with the details is Bloomberg's Danny Berger. Danny, does Zoom's booming growth then, does this, I mean, it comes as no surprise, does it?
It really doesn't. We knew that Zoom would have a great quarter considering the working at home shift. It had an explosive first quarter, but I think one of the pieces that is surprising is the extent to which we saw this explosion in revenue. So the estimate were about $500 million, but it comes in at $663 million. Now that means we saw an increase of 4 times year over year for the company. And what's really impressive here is that the company says that this growth has no signs of abating. They think that there's going to continue to be more adoption and more sales of their video services. Now, I think one analyst from D.A. Davidson, Rishi Julari, put it really well when he said, I'm at a loss for words. After the first quarter, he said that he and his colleagues had discussed the company's earnings, saying, okay, this is one of the best results we've seen in the software space. How can it get better than this? How do they follow it up? Well, he says, I think they've done it. If you look at the entirety of the NASDAQ 100, this is the second biggest sales increase we've seen this quarter.
And of course, even if it is no surprise, the CEO is a much richer man today than he was last year. Talk to us about Eric Yuan's wealth.
Yeah, Matt, after hours trading, when we saw shares of Zoom go to $410, that meant that the CEO of Zoom's wealth in just 4 hours increased by over $4 billion. He's already seen his wealth really explode this year. That chart makes it abundantly clear. That's $12.8 billion he's added this year. Before yesterday's close, his net worth, no surprise here, considering that looks probably a lot like Zoom's price chart, is made up mostly of 50 million shares of Zoom that he owns. Look, it's been a big year for some eye-popping moves in people's net wealth, be it Elon Musk, be it Jeff Bezos. We'll add Eric Yuan to that list as well. If the stock holds up its aftermarket gains, it means that his fortune will surpass $20 billion today. Matt, Anna?
Yeah, and Danny, you were flagging to me earlier how it seems broader than just Zoom, back to the sort of big picture moves around technology, how there are a number of brokers lining up to be positive about tech this morning.
Yeah, it's really true, and it's remarkable when we see this, because often when you see tech at highs, that's when we get the contrarian analysts coming out and say, okay, it's too high, take a step back. But for example, Wells Fargo this morning saying, look, if you take it through a price to earnings ratio or a price to cash flow ratio, tech actually doesn't look overvalued. It doesn't look like it did in the tech bubble. So by that measure, we should still be buying tech. Bernstein, another shop which I should say loves to take the contrarian side, said that now is the time to be going long U.S. growth. Their argument is twofold. One of them being that rates are very low right now, so that's why tech will continue to look better. Their cash flow will look better throughout the future without that inflation discounting their cash. What's more, this is really the only sector that's still issuing buybacks. In the U.S., corporates are now net issuers of stock. Buybacks are really evaporating as companies are trying to shore up their balance sheets. But U.S. growth, a lot of these tech names still issuing buybacks, which makes them an attractive buy, according to Bernstein.
All right, Danny, thanks very much. Bloomberg's Danny Berger talking to us about Zoom and tech stocks there. We've got a couple to look at in the movers as well. As Zalando, for example, is one rising higher today, raised to a buy at Goldman Sachs. This stock has gone from 45 to 75 this year, so not a bad year. You see Dialog Semiconductor there as well. Apple, you know, the story we've been telling you about all morning, targeting 75 to 80 million 5G iPhones this year. That's helping suppliers. Obviously, Dialog is one of those, and that's also a stock that's rising today, although a stock that's fallen this year. You know, Dialog started the year off at about 45 and is now trading at 37. So it's got a little bit of catch up to do. Old Mutual is scrapping dividends as profit drops, and as a result, you see Old Mutual down 7%, not a tech stock. Coming up, we'll talk more about Apple as well as Tesla climbing to record highs after stock splits. Will the effect last? This is Bloomberg.
I'm placing a stop on profit for Japanese yen at 105.25. Sorry, 7.5. 105, 7.25. Okay, it's placed.
Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the trading session right now, and we're looking at gains on European equity indexes, although the FTSE has fallen. So the broader stocks, Europe 600, is up 0.7% right now. And if you take a look at the group ranked returns screen, GRR Go, you can see the indexes that are helping to lift European stocks. Technology is a big winner. Healthcare, as well as automakers, are all up. The only losers, really, travel and leisure stocks, banks, as well as media. And if you look a little bit deeper into what's pulling down, what's weighing down the FTSE, you'll see you have drops in Old Mutual, which we showed you earlier, but also Trainline PLC, Rolls-Royce, British stocks, basically, that are helping to take points off of the index, as well as the bigger HSBC, Lloyds, BP, Vodafone, etc. Let's get the Bloomberg First Word news right now. These are the top stories from the Bloomberg terminal. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. President Donald Trump is planning to visit Kenosha, Wisconsin, the city where 2 protesters were killed last week. Speaking yesterday, he suggested the man arrested over the shootings may have acted in self-defense. Presidential rival Joe Biden slammed the president for not calling out the teenager Kyle Rittenhouse, who's been charged with homicide. Investors should position for the rising odds of President Trump winning re-election. That's the take of JP Morgan. It says betting markets for the November poll are now nearly even, and the Wall Street lender says that's largely due to the impact of recent violence on public opinion and potentially also bias in the polls. Germany doesn't expect the economic fallout of coronavirus to be as bad as previously thought this year. Sources told Bloomberg of the updated forecast set to be officially released today. Activity in Europe's biggest economy has staged a rebound after collapsing in the second quarter. Global trade is on course to recover more quickly than after the 2008 financial crisis. That's according to Germany's Kiel Institute for the World Economy. It says shipping volumes are already back at levels that took more than a year to reach following the collapse of Lehman Brothers. The institute says that hints at a V-shaped recovery. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Thanks very much, Laura Wright here in London. Let's turn once again to tech. That's where, Matt, a lot of the headlines are, of course. Apple and Tesla climbed to record highs on Wall Street as their stock splits took effect, while we've just learned that Apple has asked suppliers to build at least 75 million 5G iPhones for later this year. Joining us now is Bloomberg's tech opinion columnist Alex Webb. Plenty for you to pore over then this morning, Alex. Many themes in tech. Let's start with Apple, shall we? 75 million 5G iPhones. What exactly does that mean for a company the size of Apple? What is that telling us?
I think it's confirming the sort of expectations from earlier in the year that the virus wasn't necessarily going to be eliminating demand for its handsets, but it might push it back a little bit, and it seems to be pushing it back into the latter end of the year. The numbers that our colleagues Debbie Wu and Mark Gurman have reported as the sort of production target, they are the same as last year, essentially, which, it is broadly the trend at Apple these days. They don't necessarily sell more handsets, but they manage to wring more dollars out of the handsets they do sell. And these handsets will be 5G enabled. Irrespective of whether you think 5G is actually going to make a meaningful difference to anyone's life, it will, one expects, mean they can charge something of a premium and costs above the thousands they have been charging as a base price for the highest end phones of late.
Hopefully it makes everything better, Alex, although there are, of course, these broad conspiracy theories. They existed. I mean, when television first came out, when microwaves came out, each generation of cell phones, there's been a group of people that have been worried. I think power lines concerns people at one point as well. But they seem to be getting louder around 5G. Is that going to be any kind of detriment to the rollout of the network?
No, I mean, look, it's all nonsense. Like as you say, it's the conspiracy theories that can be fueled by any number of social media sites. I think there is a sort of NIMBYism which it might make it harder to install some of the antenna There's going to be a greater density of antenna than there are currently with 4G. I think the greater concern, and this is a real concern, is the power consumption in 5G networks. You've got more antenna, they're serving more phones. There's a concern that power consumption is going to go to the roof, and that is something which, given the legitimate concerns about the environment, that is something that we need to be thinking about and talking about. Now, the companies who make the networks, the likes of Huawei, Nokia, and Ericsson, they are working on solutions to make their networks more efficient. But even with more efficient networks, you're having more of these antennas. So that is a legitimate concern going forward.
And let me ask you about other themes in the tech space then, Alex. We've got, of course, Tesla very much in the news and Elon Musk very much in the news. Now the third richest person in the world. Just pause there to let that sink in for just a moment. The third richest person in the world. A stock split certainly works for some.
Yes. He's a very, very rich man on paper. Look, I mean, it's so hard to get your head around this tear of valuation that Tesla is on. At this stage, all the shorts are starting to look a little bit, must be a little bit concerned, given that they've been saying when it was at a far lower valuation that Tesla wasn't worth the money at which it was valued. Now, it increasingly looks as though there's a sort of, eagerness to get on board this train, to mix a metaphor, but the lack of other investments in this, sustainable transportation space is perhaps a very good reason for the fact that, Tesla is now worth more than sort of every other car company in the world put together, and Elon is clearly benefiting from that.
All right, Alex, thanks so much for joining us. Love having you on. Bloomberg Opinion columnist Alex Webb. You can check out his work by typing OPIN-GO or see the rest of the Bloomberg Opinion columnist. Up next, the question of whether or not there will be 4 more years for President Donald Trump. JP Morgan says investors should position for rising odds of that as the president visits Kenosha, Wisconsin today. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 40 minutes into the session and looking at strong gains in Europe. The DAX up 167 points to 13,115. The FTSE, on the other hand, in London down about 0.2% as some of the biggest banks and oil companies fall there. Let's talk about the U.S., though. JP Morgan says investors should position for the rising chance of President Donald Trump winning a re-election. Betting odds that had him well behind his Democratic opponent, Joe Biden, are now nearly even. JP Morgan says that's largely due to public opinion of the violence around protests, as well as potential bias in polls. For more, Bloomberg's Joanna Ossinger joins us. And, you know, Joanna, this is something that our columnist, John Authors, highlighted yesterday morning as well in his piece on the Bloomberg. Now, Marko Kolanovic, who has a fantastic record, is chiming in as well, right?
Right, and Marko has been looking at polls, at research, and he's saying that history shows that the protests are worse for Democrats. And you do have biases in polls that make Biden look like he's doing better than he actually is. And also, the COVID data are improving. So even if a lot of people might feel like the Trump administration hasn't necessarily handled that well, if it's starting to improve and go a bit into the rearview mirror, that might be beneficial for Trump heading into the election.
And so that's some of the things that are sort of lie behind this conclusion then, Joanna, about taking Trump and the potential for re-election more seriously. Still a lot could happen. I suppose that's also worth pointing out. Still a lot could happen between now and November.
Yes, and they do mention there are all sorts of things, including debates, including if we have another wave of COVID, if the protests resolve differently. But even with the protests, the Democrats are caught a little bit between trying to appeal toward broader America and try to tamp down the protests versus, say, their progressive wing, who might be more pro-protest. So it is a bit of a tough line for the Democrats. But yes, there is so much that could happen in the next 60-plus days.
Difficult for the Democrats, but on the other hand, you know, if they think they're 10 or 15 points ahead, a lot of times people just aren't motivated to come out and vote. Maybe this is, in an odd way, kind of better for the Biden camp.
Right, and that was one of the things that happened with Hillary Clinton, is there were complaints that she didn't necessarily visit places. This might be lighting a fire under the Biden people a little bit to get out there more, to kind of run like they are behind, even if they don't necessarily think they are. So yes, you're exactly right that if you're running like you're ahead, that doesn't necessarily help either.
We'll see how President Trump's visit on the ground goes today then. Thanks very much for the update, Bloomberg's Joanna Ossinger joining us there with the latest on politics meets markets. Let's go to Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. In South Korea, prosecutors have indicted the de facto leader of Samsung, JPY Lee, on charges including stock manipulation. It could potentially put the head of the world's largest electronics company on trial for years. The indictment is related to whether Lee and Samsung used illegal means to help him take control of the firm founded by his grandfather. The glitches yesterday on Robinhood and other online brokers, they've been resolved. Robinhood saw problems related to equities, options, and cryptocurrency trading, but said yesterday afternoon that the issues had been fixed. Problems also hit TD Ameritrade, Vanguard, and Charles Schwab. Elon Musk is now the third richest person in the world, passing Facebook's Mark Zuckerberg. He was helped as Tesla shares continued their rally after a stock split. According to the Bloomberg Billionaires Index, Musk is now worth over $115 billion. His net worth has grown nearly $90 billion this year alone. That's your Bloomberg Business Flash. Matt, Anna.
All right, Laura, thanks very much for that. Laura right there in London with your Business Flash. Now, the Hong Kong Exchange has kicked off its flagship biotech summit. The virtual event comes at a time when healthcare-related listings in Hong Kong have surged to a record amid the COVID pandemic. Earlier, we spoke to the Hong Kong Exchange's and clearing chief executive Charles Lee.
This is just the right thing to do at the right time, and is such a big sector, and China is such a big country with very massive aging population, huge healthcare challenges, and lagging drug development. So all of this require Asia to have a center for biotech so that we can support research, we can support the massive healthcare reforms that China finally kick off. I think that's a very big event, because China finally, just literally 4 years ago, brought the entire drug administration system into exactly the same, almost as FDA. In fact, they call themselves a CFDA. That reform essentially bring China's standard of governing drug administration, pretty much the same with the U.S. So that reform set the foundation for us to be able to, again, take a huge reform in the biotech sector in terms of listings, because they have no revenue, obviously, before they can even sell anything. They need to have a government approval, but they were really heavily regulated. So we thought that previous history of being able to be regulated allow them to be listed, despite the fact that they do not have the traditional financials that typical companies that we ask for before they can list here. So it was a great event. It's a milestone. We never thought COVID-19 is going to hit us, but now looking back, I don't know how we could cope without this new sector that is allowing so many companies just to join the race, finding a vaccine, finding therapeutics, and finding solutions.
So what's the edge for Hong Kong then? Because we know that China has domestically also been deregulating to make it easier for some of these, particularly unicorn companies, to list domestically on the Star Board, or making it easier for them to list on the Chinex as well. So what's the differentiating factor for going to Hong Kong?
Well, we have always, for the last, 7 out of the last 11 years, the 7-11, we are #1 in terms of IPO. So there is just, we are the IPO center around the globe. And so, that's just the tradition. And also a drug development, in this space is very international, and requiring tremendous amount of scientific collaboration between the US, China, and Europe. And the scientists are really all over the place. They're writing, they're publishing. So there need to be a very significant international component to it. So Hong Kong provide that great international connectivity. And our rules, obviously, before couldn't really handle this. So we had gone through a massive reform and really allow all pre-revenue, but second phase clinical trial.
Well, we close position on Japanese yen at 105.725.
Together, so I think we provide that unique combination.
But HKX is not done yet, right? What more will you see in terms of reform, and what sort of tweaking in the rules could we see as you try to attract more listings?
Well, I think in the broader reform, because Chapter 18A, which is the pre-revenue biotech chapter, is a part of a very large comprehensive reform of really changing the landscape and changing the composition of our market. So a lot of reforms have to do with WVR, VIE, and many of the U.S. companies have certain unique corporate governance structures that do not necessarily fit in here. So we need to find a way to see whether we can make it work for them eventually to all come back. But for specific biotech 18A, I think the bulk of what we needed to do is pretty much behind us, done. But there are a lot of tweaks here and there, and just to make the offering a little bit more, easier. And so there are a few things that we're working with our regulators, our listing department colleagues, but we're not talking about fundamental change.
That was the Hong Kong Exchanges and Clearing Chief Executive Charles Lee speaking to Bloomberg's Heidi Stroud-Watts and Sherry Ahn. Just to tell you, we're getting some numbers coming through on manufacturing PMIs for Europe. The Italian number rising to 53.1, ahead of an estimate of 52. Stocks start September mixed after tech pushes the Nasdaq to another record. How long will that last? We'll talk about that with the Markets Live team. We'll also throw in some of this breaking news on manufacturing PMI, the French number just breaking 49.8. This is Bloomberg.